I want to bring in Ellen Wald, the president of the energy think tank Transversal Consulting. Thank you very much for joining me. How much do you think this oil price rise reflects supply distribution as opposed to market sentiment?
Yeah, I think what's going on, at least right now, is really twofold. The first issue I think we're seeing is that the market's coming to realize that the Russia-Ukraine conflict is not going to be over nearly as quickly as they had previously thought. And so this fear that all of this oil from Russia was just going to come right back onto the oil market is dissipating. And so prices are climbing to reflect that. The second thing I think is that the market is looking at the tensions between the U.S. and Venezuela, and prices are rising a bit based on that, though I think that they don't quite see the situation as it really is, because there's always this idea that military conflict is going to disrupt supply and therefore prices should rise, though in this case we're talking only about Venezuela's supply. Nothing's going to disrupt America's oil supply. And so we are seeing disruptions to Venezuela's oil supply right now, but that supply is all on the sanctioned oil market. So really the only prices that should be going up are the prices for Russian crude and for Iranian crude. This oil is basically being commandeered, and Trump has recently said that, hey, we're gonna take this oil and we're gonna use it ourselves or put it into the SPR, and that actually should make oil prices go down, because this is sanctioned oil that hasn't been in the regular oil market, and suddenly Trump is talking about introducing it to the regular oil market. So it's kind of an interesting reversal of what you would automatically think should happen, as opposed to what would actually happen to supply.
Do you think the US-Venezuela frictions could reshape trade flows for the longer term?
I do think that there is a possibility here of a real kind of switch in terms of Venezuela. I don't think it's highly likely, because I really don't see the possibility that the U.S. is going to invade Venezuela or overthrow the Maduro government as particularly likely, though there is a chance that these tensions and the pressure on Maduro could cause some political change in Venezuela. If that happens, it's possible that we could see a real complete change in Venezuela's oil industry, with capital maybe coming in from outside to reinvigorate it, and leading ultimately to more oil coming on the market, though that's really in the much longer term. I'm looking out, at least a year, if not more, for that to really happen.
Looking ahead then to 2026, how would you say those geopolitical risks interact with softer demand expectations in oil price?
Yeah, I think softer demand expectations are definitely weighing on the market, especially in terms of forecasts. It does depend, if we do see U.S. supply start to decline, then perhaps the softer demand expectations won't play as large of a role in determining oil prices, but that's, that remains to be seen. We haven't seen U.S. supply really start to show signs of decline yet, though everyone kind of expects that it should be happening soon. I do think that geopolitical tensions are a huge impact. I mean, the report just mentioned that it was the Iran-Israel war that caused the largest spike in oil prices that we've seen, in a single day since the Russia-Ukraine war. So geopolitical tensions absolutely are going to impact the market a lot, and I think that producers would certainly like to see some of those spikes, because if we do see that softer demand is kind of ruling the day in the oil market, then they're going to be looking for those geopolitical tensions to push oil prices up so they can get more for their barrels.
Ellen Wald, thank you very much indeed for that.